I gotta fix that banner. Okay, so it says we are live right now on Facebook, Instagram, not Instagram, LinkedIn, and YouTube. So I want to welcome everyone. My name is Eric Holman. I'm a real estate consultant and a realtor with the DeSilva Goss Group at Keller Williams Select Realty. Today I have special guests for a live Q&A. Feel free to fill in the comment section, and we can see that. We can answer some live questions. We do have a few already prepared that we'll go through our guests with. Tonight I have with us, I'm just going to go in the order of my screen here. We have Mike Hagedorn with the home inspector with A Buyer's Choice. And below, Colin Oldreive with the Cluett insurance broker, and Danielle, Hardie, mortgage broker with Premier Mortgage Brokers. I'm going to let you guys do your own little introductions so I can have a little break. So first off, I want to welcome you guys all and thank you for doing this with me. This is a very new thing for all of us, so we will warn everybody a little bit. But I hope you guys enjoy this. I hope you guys want to do this again with me, and we can have some future stuff. I'm going to get rid of this real quick because it is annoying me. So cheers tonight, guys. I hope that we have a good start to this, and we can answer some questions and help educate our future clients.
Cheers.
So Mike, I'll let you start. Do your little introduction. Tell us about yourself and who you work with.
All right, thanks, Eric. I'm Mike Hagedorn. I'm a home inspector with a Buyer's Choice Home Inspections, and I've been doing this for just about a year now in Halifax, and just really happy to be here. Thanks for inviting me, and I'm happy to answer any questions you might have tonight. And I know that Eric, you've got some for me already, so
yes, and we'll see where the night goes.
Yeah.
All right. So Colin, how do you do a quick introduction yourself for us, please?
Sure. My name's Colin Oldreive. I'm an insurance broker with Cluett Insurance here in Dartmouth. Been in the insurance industry directly for 12 years, indirectly for about 17. Been with Cluett Insurance now about a year and a half. And I did a long stint with Allstate and then made the switch over to the broker world and really enjoying it.
So you bring lots of experience, even being back in the city. Like me, I've only been back in the city, 4 years now, and licensed for just over 3, almost 4 now. So at least we both have lots of background.
Yeah, born and raised here. Brief stint away and back.
All right, thank you, Colin. And so up next, Danielle.
I am Danielle Hardie with Premier Mortgage, and I have been in the mortgage industry for 25 years, actually. So that makes me feel very old right now.
So I've been in real estate for 15, so.
Well, it's hard to believe. So any questions, about mortgages? I'd like to say no every answer, but every day I still get new things. It's a interesting time in real estate right now.
Yes, I think all of us are experiencing that in all our careers right now. So thank you very much, Danielle. So I'm just going to check no current comments, questions as of yet. So let's jump into our first questions that we kind of had prepared and ready to go for each other. So I want to start with Colin. I'm going to bring up 1 second there, Colin. So, first question for Colin. Does the rise in market value of homes lead to a rise in home insurance premiums? Can you tell us a little bit about that and your experience so far?
I can, and this is a question I get asked all of the time, and the answer is no. We don't insure homes at market value. We insure homes for rebuild value. The best example I could give, right? You have a 1,200 square foot bungalow sitting next door to me here in Woodlawn versus sitting on a lake somewhere. That house, right, in Woodlawn here, 4 or 5, maybe 600, maybe 700 in today's market, 1,000. You put it on the lake and it's $1 million. In terms of insurance, the cost to rebuild that house is the same, no matter which lot it's on. So in terms of what we're going to insure that house for, it's the same thing. We don't change the property. We don't sell it. We don't move it. We just rebuild it. and the lumber costs the same, whether it's this side of town or the other.
Yeah.
We did see a bit of an increase inflationary when building materials went crazy with pricing. At that point, it did become a bit of a concern. Are the rebuild prices high enough or not? But those seem to have settled, and it's not as much of a concern. But yeah, the quick answer is no. The market value we don't insure. And we get that question. You do a quote for somebody. Yeah, the house is probably $350 to rebuild. I spent $700,000 on the house. I get it, but that's not what it would cost us to rebuild it for if it burned down.
Yeah, exactly. Yeah. So and you made a comment. I'm gonna just ask you a little bit further there, because I know I'm dealing with it with new construction and cost of labor and cost of lumber and cost of everything has gone up. So that doesn't really affect what you're quoting now.
As I say, there has been some increase. Like they do, every insurance company will take sort of inflationary increases here and there. It hasn't been a crazy jump. And I've done a couple of custom builds, where our calculations have come in lower. And I mean, in that case, those people know, like, well, I just paid this guy $850,000 to rebuild the house. Like your estimate of $700,000 is low. Well, let's insure it for what it's at. I mean, the nice part, most insurance companies now offered a guaranteed replacement clause, where if you tell us you have a 1,200 square foot bungalow and the estimated rebuild is $350, you have a fire and it actually costs $420 to rebuild it, they're just going to rebuild it. They guarantee the replacement. They're not going to get nitpicky over, as long as it is that 1,200 square foot bungalow. Right? If you say 1,200 square foot bungalow and they show up and it's a 2,000 square foot bungalow, then it's a different story. But if you told us this is what it is and that is what it is, then the insurance company's going to, as long as you have that guaranteed replacement clause in there, the insurance company's going to rebuild it. They're not going to hit that $350,000 and say you're on your own to put the roof on it, kind of thing.
Right. Yeah. Okay. No, that's great. All right. Anybody else? Do you guys have anything else follow up on that with Colin, or anything else to clarify? If not, I'm going to jump over to who wants to go next. This is like fun random game. I could just pick any of you. It's like, whose question is going to pop up next? Let's go. Yeah, exactly. A little roulette going on here. All right, Danielle. Why use a mortgage broker rather than my bank? I hear this a lot. I'm sure you do.
I get this a lot. And listen, it's not that people can't go to the bank and have a great experience. Definitely. There are some really great people that work at the bank. I worked at one for 18 years. But one, if you've noticed when you go into your bank, is it the same people? Chances are it's different staff all of the time. So you may have someone who is just doing their first mortgage. So they may not have the experience to give you that information. But the biggest reason is choice. When you go to the bank, they have that one product for you. So if the home that you want to buy doesn't fit into that mold and they won't do it, then it's declined. Whereas with a broker, we have up to 30 different lenders that we can choose from. And we have A side, B side, and private. So there's more options, and we have access to some really great lenders.
No, that's great. I mean, that's definitely down the road. I mean, private lenders is definitely something we should definitely be talking about and helping educate more people about, because I think there's opportunities there. Would you agree?
Oh, definitely. We're seeing more and more, like B-side and private, because not everybody, has their traditional credit income. Everybody's situation is different. That's why I love mortgages, because really no two files are ever the same. There's always things. People who are self-employed, they might need to gross up their income. Or, there's lots of different reasons of why we would go to the B side, maybe some credit issues. So with a lot of the main banks, if you've had a bankruptcy or if you've had credit issues, they're a flat out no right off the bat. Whereas I would look at ways to see if you fit in with one of our other 20 lenders.
Right. No, that's great. I mean, that's the wide range of options. Like, same with Colin, as a broker, you guys have more opportunities, more choices to choose from to help get your clients your best opportunities for them, right?
Absolutely. Yeah.
Yeah, we're doing the shopping for them.
Yeah. Same with me. Like, I mean, a lot of people think, I screen all the listings I send to my buyers prior, like, because I know, I've had listings pop up somehow it shows as a 2-bedroom, but my clients need 3 bedrooms, so I don't even send the listing to them, right? It's just, it doesn't even make sense to send it to them. All right, so obviously we know we're going to jump over to Mike here next. So Mike,
Yes.
which one? I'm going to start with. What's the most important aspect you look at during a home inspection when you're working for the buyer?
I always look for a really good front door. That's the most important thing. No.
That's a good one, actually.
Actually, that's a really hard question because there's not really one area of a house that's the most important. But when it comes to not missing anything, I don't want to miss anything that's going to potentially cost the buyer a lot of money down the road. So that could be anything big from like the furnace, the roof. If the roof has to be replaced, it's a big expense. If there's any structural issues, those kinds of things are going to be the big ticket items. Anything that requires skilled trades like electrical or plumbing issues, those are all big ticket items. It costs a fair bit of money to replace. So yeah, it's anything that's going to cost the buyer a lot of money is typically what I make sure I don't miss.
Yeah, but and I mean, you're still looking at all the little things too. We want to make sure they know that. I think the big thing for me, especially like, I'm in these houses before you are if you're in front of my clients. I've already talked to a lot of my clients. I mean, I don't have the extensive knowledge you do, but being in the industry for 15 years, I know, cracks in a foundation or definitely musk in the air in the basement, there's going to be some sort of water issue. So for myself anyways, I love working with somebody that I know really well, because when you show up as my home inspector, I can say, we have this issue in this location. Can you further investigate? The big one, especially cracks in the foundation and attics. Attics is I found, so my experience of selling in New Brunswick versus now selling in Nova Scotia, I've noticed more moldy attics here than I have in New Brunswick selling. And I think it is because the moisture, we definitely are more humid here, right? Versus even where you came from Ontario, you probably saw less of that type of stuff in your own homes.
Well, actually, Ontario is quite humid too, but in the summer especially. But I know what you're saying. I don't really know much about New Brunswick humidity levels, but it would make sense that we're a little bit more humid here. And
Well, I mean, I was in Fredericton. Fredericton is very humid in the summers, but yeah, my home inspectors, they all crawled up in the attics in Fredericton. But I didn't notice it, or we didn't see it as much as I have here in some of my home inspections.
Not really sure why that is, but that's interesting.
It is, yeah. All right. Well, that's great. I'm going to just, whoops, 1 second here. We got a comment. So we have Kim Sampson. I once heard that home inspectors in Nova Scotia aren't regulated, meaning anyone can offer home inspections. Is that true? I will let you deal with that one, Mike.
Okay. So technically it is true. Anybody can call themselves a home inspector, but we do have, I haven't really come across any home inspectors here that aren't a member of an association. I'm a member of INTERNACHI, which is the International Association for Certified Home Inspectors. It's based out of the States, but it's largely used across the world. And we also have the Canadian CAPI, Canadian Association of Property or Professional Home Inspectors. I'm not a member of CAPI, that's why I don't know what it stands for, but I'm a member of INTERNACHI. So if you are hiring a home inspector, make sure that they belong to one of those two organizations. I think you're set, because everyone who belongs to an association like that follows a code of ethics, and they're trained by their associations, and there is, so there's not really official licensing, but there is definitely certification and qualification when it comes to professional home inspectors here.
Yeah, that's great. That was a great question. Thank you very much for that, because it is true. Actually, of the four of us, three of us are regulated by, governing bodies that, watch and do basically everything we do. I know, Mike, you might not be able to talk much about this, but I know your owner is pushing and is one of the people that really wants that your industry to be regulated. And I've had conversations with him before. So that's one of the nice things about your company too, that way, right?
Yes, for sure. Yeah, and licensing is probably coming eventually. It's not a matter of if, but probably when. I know that a couple of provinces are moving that direction, or if not, they're already. So yeah.
Even Danielle just went through that. So.
Sorry, what was that?
Danielle just went through this.
Oh, yeah.
Yeah, so actually mortgage brokers weren't regulated until November of this year. So Premier's always had a pretty high standard of who they'll work with, but yeah, we just went through that. So yeah, just a few more courses, pay a little bit more. And
exactly. No, that's a great one. Thank you again for that one. That was Kim. Thank you again. Colin, I'm going to flip back around to you, and let's see what we have. So, Colin, what is the difference between using a broker, insurance broker, versus a direct writer like the banks?
Similar with the mortgage industry. With a mortgage broker, we have access to 15 different markets to take your profile and shop it around. And see who comes up with the best offer, whether that be price, whether that be coverage, whether that be other terms that you might be looking for, or whether it's something you have that is unique that, again, maybe some companies won't have. Your direct writers are your banks, your TD, RBC, Allstate, cooperators. You call them, you deal with them. They have one product to offer you. If it works, great. If it doesn't, then it doesn't. As I say, I did a long stint with Allstate, and that was sort of the thing. You would have a customer for a long time, and you were able to help them, and everything was good. And then they would move, buy a new house, start a business out of the home, do something that all of a sudden Allstate didn't want to insure, and I just couldn't help that person. It was like, sorry, you got to call somebody else. So I've made the move over to the broker world, and there's a home for everything, and every case is a bit different. But the difference is that we do that work for you. If something goes awry, you're not happy with your price, you're not happy with coverage, rather than you pick up and start calling 5-10 different companies to do that shopping, we do that on your behalf. Yeah. And then give you the options of, this is the price, this is the coverage, this is what you could have, all the different options, and you get what you're sort of happy with. So,
right.
Yeah.
Very, very similar. You and Danielle would have a lot of commonalities that way with the broker world.
Absolutely, yeah. And I mean, I remember when I was buying my first house, and I had made an appointment with my bank. Like, I banked with Scotiabank forever and ever, and I was like, I'll just go and get my mortgage. And then I realized it's like, I know a friend of mine that I coach football with that's a mortgage broker. Like, I should just go. And I went in and sat down with him. He's like, this is my best rate. Take it. Go with it. He's like, keep your appointment at the bank. They're not going to be able to touch this price. Like, she's just going to look at you and tell you no, but keep that appointment in case I'm wrong. And sure enough, it was Scotiabank, and I had my credit card there, line of credit, all my paychecks had been going in there for whatever, 10 or 15, 20 years. She's like, I can't even come close to that price. She's like, I had a bigger portfolio than yours with a late rate that wasn't that good, and I couldn't get it approved. She's like, can't do it. I was like, all right, well, there you go. But that's the difference, right? They have, whereas at other times the banks, like she said, like sometimes we have promotions and our rates are rock bottom, but when they're good, they're good. When they're not, they're not, but they have no option. So with the broker, they have the option to move around. And so, yeah.
No, that's great. And that's the thing. Like, I've dealt with both on my side of the world of real estate. Sometimes it's like Danielle spoke to, like sometimes I'm actually dealing with somebody that's doing their very, very first mortgage versus somebody that, like Danielle, 25 years experience. It's night and day for the client and for myself and whatever end I'm representing. So it's nice to have those options for sure.
Yeah. And I mean, the direct writer line, I mean, they're not without their advantages. I mean, the one advantage is they tend to be a bit quicker simply because they have one set of rules, right? If you fit within that, they know everything right off the top of their head.
Yeah.
Whereas with me, like I've got 15 different companies. I can't possibly know every rule with every company. So it takes a little bit more time.
Yeah.
You'll get more options, usually a bit more coverage, probably a better price, but you might have to wait a bit.
Right.
And then the other thing is you do get, right, a person, like you have a broker, you have a claim, you call me, payment, you would call me, you change a car, you buy a car, you call me.
Yeah.
Whereas when you're with the banks, the TDs, the Allstates, the Cooperate, you call an 800 number.
Yeah. The call
And
centers.
somebody will help you, but you may have to, if it's something you got to call back a couple of times on, you may have to tell your story and you may have to sit on hold for a half hour, 45 minutes. Like I may not answer the phone every time, but leave me a message and I'll get back to you usually same day and get it done.
Yeah. Yeah.
But
exactly.
the service piece is typically better with a broker too, because we represent you. Whereas when you're dealing with these direct writing companies, they represent their company.
Yeah.
Right. They're an employee of TD. I'm not. I work for a brokerage. I get paid to help you. When you buy, I get paid. If you don't buy, I don't get paid.
Right.
Right. You are my customer and I work for the customer rather than working for the company. That's
totally different relationship building and stuff like that too.
Yeah.
Great. Well, thank you very much for that one. Danielle, I'm trying to keep an eye on time for you as well. So you are next. What do you do to help clients qualify for higher amounts?
I just say you get a mortgage and you get a mortgage.
Team Steel.
I want more.
Yeah. In this market, I mean that really people are trying to qualify for higher amounts than what they ever thought they wanted before. Unfortunately, so when I'm looking at a file, when I have a client, I get full paperwork upfront. I want to see your income, your down payment, your credit history. I want to pre-qualify you. So when I'm reviewing all of that information, I'll look at it as it is, as it's presented to me. But then I might look and say, okay, well, you'd mentioned you wanted to put a 10% down payment. But if you actually only put a 5% down payment and paid off this debt, I can qualify you for $50,000 higher. So there's different things that we could look at doing. One of the options I have as well is cash back. So we have some lenders that will give cash back to pay off. Maybe you have a debt and by paying that off, it's going to free up more cash flow. When you move into your house, you're not going to have that debt. You can have that paid off. And it helps you to qualify for a higher amount. So it's knowing everything that's available. It's the first time home buyers incentive. It's the Nova Scotia down payment assistance programs. It's knowing how much you can take from your RSPs, what you can do with those funds. So there's a lot of different things that I can look at to try to get, someone a higher amount. It doesn't always mean that I can. Sometimes I might get, a client reach out to me for a second opinion. And they've said, oh, I'm pre-approved. I can go buy a $450,000 home. I talked to somebody at wherever. And I'm like, okay, well, and then they want a better rate. So they're reaching out to me. And then I do a full look and I'm like, actually, you wouldn't qualify for this amount that you think you're pre-approved for, because whoever was looking at this or whatever numbers you were entering, if you were doing it online, it may not be what's actually required. So for example, a line of credit, your repayment on it may be $10, minimum of $50. However, we have to actually use 3% of the balance as a repayment on that. So when you're inputting on a pre-approval, trying to get one online, you're putting in the information, it might not be accurate. So it can work both ways. I can help people qualify for higher sometimes, but sometimes they may not qualify for as much, but it's good to know that before you get excited and go look at 20 homes in a price point that, maybe doesn't match. So one of the things I'm saying to, realtors, especially yourself, Eric, is if you're talking to clients and they say, oh yeah, I'm pre-approved, and I would ask, did you provide paperwork? And that simple question, if the answer is no, say, maybe talk to someone else just to make sure. in this
Oh, yeah.
market, you really want to be sure.
You gotta trust your spidey senses sometimes as a realtor.
Yeah.
It's funny that, you know, we had this question kind of lined up, and you actually made a comment about line of credit. So I had a friend of mine that reached out to me today through Facebook, and so he's got a son that just he's doing his first real estate purchase, his first house. So I'm gonna throw this at you and see what you say. So he says he's looking at buying a home. He has his deposit and closing costs, line of credit. But the bank is saying because it's not 90 days old, they can't accept it.
So, okay, so he has his down payment, but it's coming from a line of credit?
No, closing costs, I believe, are coming from the line of credit.
Okay.
Is
so
it's kind of how I understood the message.
So that's a really good question. So what most lenders want to see is a 90-day history of where the funds are and where they've been. So did he just receive a large lump sum? Where did?
Well, he says the bank is saying that because basically the line of credit is not 90 days old, that they cannot accept it. They said if he were to pull the money out and I give it back to him. Oh, okay, yeah. No, basically that's kind of what I said to him. He's like, you know, if he pulled that money out, sent it to his father then sent it back to him. I said the bank's still going to want to see it in his account for 90 days. Correct, right?
Well, yes. I mean, there's different things. I mean, if he's taking the money, it sounds like he's taking the money from a line of credit, though, for the down payment.
That's kind of what I'm thinking now too. Yeah,
is what it sounds like. So, and that can be done. However, that bank or lender may not allow that. So when you're doing something like that, that you're taking funds from a line of credit, well, one, we have to use that line of credit repayment amount back into your ratios. But the 90 days, for some reason, it makes me think that, are they talking about RSPs at all, about making a deposit to RSPs and then taking it out within the 90 days? Because that's something, like if you make a contribution to your RSPs and then you want to take it out under the home buyer's plan, it does have to be in there for 90 days. But if a down payment is coming from a line of credit and they can see that that's where it's coming from, that should be proof, unless they don't accept a down payment from a line of credit. And then
and that's kind of my question. That was my next question in my head, is like, maybe this bank doesn't accept that form of as for the down payment.
Exactly.
Basically, I said to him, it's my favorite line to say to every client is like, I know a little but a lot, not a lot but a little. And that, that's above my pay grade, is basically what I said to him. It's like, you or your son really need to talk to their mortgage broker or mortgage person at the bank to clarify. Because, when I get questions like that, I'm picking up the phone, I'm calling you or someone else I know that, deals with these mortgages, because the mortgage rules change drastically so much every day, almost, it seems, lately.
There's a few changes.
I thought I'd throw that out. Yeah, I don't.
No, it's a good one.
I definitely couldn't answer. I said that, like I said, to me that was a very tricky question, but it's above my pay grade because it's not something I deal with daily.
I would have more questions for him before I could answer that fully. How I feel.
I know, it's funny. It's like I'm driving and all of a sudden I look and saw this message. It's like a stop sign or something. I'm like, oh man, I can't. That's way gone. All right.
But I do have to take off, unfortunately. But it was great to meet you guys. And if anybody has any other questions that come up, you can let me know, and I can reach out to them to provide the answer. So
definitely.
Thank you very much.
Thank you for coming. Right. Hopefully we can chat again soon.
Oh, for sure. This is great. Talk to you guys soon.
Bye now.
Bye.
All right. See you, Danielle. All right. So just us.
Then there was
and then there was 3. So I'm going to take the next. So Danielle actually threw a question at me, and it kind of goes well with what she was just talking about, or I was talking about. So basically, she was asking me, do I expect the market to stay as hot, a hot seller market this year? And the easy answer is yes. Today, I actually, just before I hopped on this, I looked at the active listings in Halifax, Dartmouth, and all of Nova Scotia. So just in active listings, single family houses, condos in Halifax, Dartmouth, which also includes Bedford, Sackville, Hammonds Plains, surrounding areas, there is 238 active listings for sale. In all of Nova Scotia, north to south, west to east, there are 1,008 listings active for single family homes.
Wow.
That's not a lot.
So do you know what the numbers were last year? Like in terms of
I didn't pull them real quick, but basically, I mean, in the past, typically January, February, March are low listing inventory anyways. But in, say, Halifax and Nova Scotia, in past years, we'd still have around 2,000. In a normal market. And then what would I'd normally say about typically after March break, when the kids go back to school from March break, that's typically the historical when our market would pick up for spring and summer. And then, lots of listings during those months. And then just before school starts, everything dropped again. The winter was usually slow, and then, the whole roller coaster up and down. But I was looking way back in, say, like 2014, July 2014, there was all of Nova Scotia. There was I think there was 7 or 14,000 listings.
Wow.
And now, we're dealing with, no more than 1,000 in Nova Scotia, just over 1,000. So,
and our population's over 1 million now.
Yeah, and that's the thing. Our population's over 1 million. There's historic low levels of inventory. The builders can't build enough new ones quick enough. Rental vacancy rates are less than 1%. Even that's, hard to find too. So, the easy answer to that, like I said, is yes, we are going to stay in this hot sellers market. And, our average prices are still gone up. January, our average sale price in Halifax, Dartmouth was over 500.
Wow.
In December, it was just over 450. So, December to January, it jumped. It's crazy. I mean, most listings are going 100 to 150 over asking right now on minimum. And last summer, you were looking 75,000 over ask. So we'll move on from that one, because that's a difficult situation for a lot of buyers, and with the mortgage people, and March, Bank of Canada is coming out with they'll make their announcement for interest rates. So basically, if that goes up, then mortgage rates go up, and that means buyers can qualify for less. So it's basically going to be a very hard situation. Colin, I do have one more question here for you, if you're good.
Yeah, fire away.
Awesome.
I'll do my best.
So, what's that?
I'll do my best. I make no promises.
All right. So, Colin, what are some things that people can do to reduce home insurance premiums?
Lots of things. I mean, the first obvious one.
Loaded question, right?
Yeah. Right. Everybody wants to save money on their insurance. Nobody likes paying insurance. I mean, the first obvious one that jumps out is discounts. Taking advantage of what's out there. The biggest one insurance offers is combining home and auto. So always having a look at trying to bundle your auto insurance with the home. Doesn't always work out that way, but 9 times out of 10. That's how you're going to get your best pricing. Making sure you're keeping your insurance company up to date with updates you do in the home. If you redo your roof, electrical, if you get rid of oil heat and go electrical or propane, that kind of thing. is going to save you money for sure. Staying on the discounts if you pay off your house, if you're mortgage free, there's a big discount for that on home insurance. Security systems and automation. A lot of people nowadays are putting in automation, camera doorbells and water sensors in the house and different security systems that are all controlled from your phone now. A lot of that stuff will qualify. You actually get a certificate for your insurance company when you buy most of those things. There's good discounts to be had there, specifically with the water monitoring. Just in the last couple of years, water has surpassed fire as our biggest expense in terms of an insurance industry. We pay more for water damage than we do for fire now. So those are some of the big ones for sure. And then just general upkeep of the house, like avoiding claims. There seems to be more and more of an attitude of, my insurance will cover that, my insurance will cover that, my insurance will cover that. They will to a point, and then they say, no, we don't want to cover you anymore. Doing the general maintenance, keeping the gutters clear, that kind of thing, so that things drain properly, water moves away from the house, cleaning your dryer vents and making sure the house doesn't burn down. I mean, the general rule with insurance company, one home insurance claim, you get a little bump in price. If you have 2 home insurance claims in 3 to 5 years, a lot of insurance companies don't want to insure you at that point. So, I mean, that's the big thing to consider is, those small little things rather than the attitude of insurance will cover it. Well, no, get it fixed, prevent the loss. Because you want to take care of your stuff. That's just personal pride and things. Other things you can look at, your deductible. If you're the type of person that, I'm never going to file a claim for less than $100,000, like the house doesn't burn down, I'm not filing a claim, then, you can bump your deductible. Instead of $1,000, put it to $10,000. If you're never going to file a claim anyways, it may save you $400-500 a year on your house insurance, depending on your premiums and that kind of thing. And then the big one, that pretty much every insurance company does now too, is we use what we call an insurance score when we do home insurance. It factors in insurance history. It also looks at credit. It's not an application of credit. It doesn't affect your credit. But it does look at that. And basically, we get a score. We don't get any information on your credit, but they do use that for discounting on home insurance. Some companies go very heavy on that, some not so much. But, credit is a huge indicator of possibility of claim. Somebody has $5,000, $6,000, $7,000 worth of roof damage. If you look at it, someone with credit is typically going to just fix it, right? They've got a line of credit sitting there, or they've got room on a credit card, or they've got something, they're just going to fix it and deal with it. Whereas somebody with not great credit, they don't have that availability of those funds. They're calling their insurance company. They'll pay the $1,000 deductible to get the $7,000 or $8,000 fix. So, it's a big indicating factor, the credit piece, in terms of frequency of claim, not necessarily the big one. A house burns down, It doesn't matter if your credit's good or not. That's an insurance claim. But it's those smaller ones that add up over time and really end up costing the insurance companies big money that they look at for that indicator. But
and you mentioned like the water. That's the water's probably a larger claim now than fire, you said?
In terms of cost and payout, we pay out more for water damage, whether it be sewer backup, a burst pipe, flooding, leaky roof. But water has surpassed. And I mean, there's 2 reasons for that. One is we're seeing a lot more weather systems, really severe, really wet, ice, wind, right? And
severe from one range to the other severe. Like, I mean, just recently, like, we get snow, then we get rain, and upcoming we have, tonight we have rain and then a flash freeze tomorrow. So our weather definitely has changed drastically.
Right. So that's just it. And so we're seeing that. And at the same time, insurance companies are also offering a lot more water coverage. Like when I started in the industry, if you asked me, is flood covered? No, nobody covers flood. Like, it's just outright. Insurance companies don't do it. Whereas now they do. Pretty much every company is going to offer an overland water coverage. And with that, obviously, comes a lot more expense to the insurance companies. And rather than saying no to all of these flooded basements, it's like, yep, here's a check for $50,000. Go for refinish your replace your furnace. So Right. So yeah. So that those
You-
factors
well-
can play in, but I mean, you just look at the way. I mean, we've had a nor'easter every weekend for the past 5 weeks. Every Monday, I'm
Yeah.
picking up 2 or 3 claims calls.
Excuse me.
Yeah.
It's definitely been crazy.
Yeah.
And then everybody calls Mike to say, "Why are my roof shingles gone? Why is my siding gone?"
We have had some calls where well, not shingles, but like there's some water coming in my basement now. Well, when we inspected your house, there was no we didn't have a storm every week. And, we'll report on what we see at the time, and so now with everything, all the precipitation we've got, there's just a huge amount of water in the ground, and so if there's any time the water's going to come in your basement, it's going to be now.
Yeah.
Well, it's just a ton of water and the ground's still frozen. It's got nowhere to go. Nothing soaking
Yeah,
up.
exactly.
Yeah.
All right. Well, thank you for that, Colin. That's I know my old world selling in Fredericton, the big thing the big question I always got was, how close are we to the St. John River and the flooding plain?
Yeah.
We had historic floods there when I was living in Fredericton, and basements that never got wet. They had 5-6 feet of water in them during that flood sometimes. So
Wow. Yeah.
we should be lucky we're not near big major water sources like that. Most of us in Nova Scotia here.
Mm-hmm.
All right, I have another question here for you, Mike.
Okay.
We didn't do we didn't do this one yet. Pre-inspections, especially in this hot market. So tell me a little bit about your experience. Like, I mean, of course, a pre-inspection for you is great. You get ahead of the ball game, and for sellers. So you tell us a little bit about that.
Yeah. So home inspections are typically done and paid for by the buyer. For those of you who don't know, you get an accepted offer on a house, and then you book a home inspector, get a home inspection, and decide whether the inspection report is good, and you decide to go ahead with the house, or you need to ask the seller for some money back because there's some significant issues that you need to address, or you walk away from the property because you don't want to deal with it. When on the other side of things, when you have a hot market like this, a lot of buyers decide, well, I'm going to buy the house regardless. I want to have a little bit of an edge on my offer, and maybe the seller will pick mine over someone else's that is conditional, where I don't have an inspection condition in the offer. So what pre-inspections is trying to limit the liability and make it easier for buyers who don't want to put a condition in their offer to go in with confidence. So especially in this market, a seller can decide, okay, we'll get a pre-inspection done so that anybody who's on the fence about making an offer on our house will now be able to come in with a firm offer, or at least be a little bit less timid about making an offer on the house.
Or even just removing that one condition, which can be a hiccup sometimes.
Right. Yeah. And then on the other side too, from a seller's perspective, if there is something that's potentially a deal breaker for a buyer that we discover during the inspection before it hits the market, it gives them a chance to deal with that before it gets listed, so that that's not going to be a deal breaker for somebody. Because what happens when a house goes on the market and then it goes to pending, and then it goes back on the market. The buyers are going to see that and say, "Oh, what's wrong with that house? Why did it go back to the market? 3 or 4 times? Is it failing an inspection every time? Well, do you get the full answer when you ask about it? Who knows, right?"
Yeah.
So,
yeah.
And then on the other hand, too, from your perspective, from both buyer's agent and the listing agent's perspective, I'm not sure how it works in terms of your liability if you sell a house without an inspection, or if you somehow don't disclose something. If the buyer detects something after they buy the house that, oh, maybe this should have been disclosed to me, who are they going to go after? They're going to go after the home inspector, if there is one, and then the person who sold it to them, the realtors. And so if you have that,
we'd be all named.
Yeah.
I mean, it's funny. I can give you a little personal story on that.
Okay.
So prior to me even being in the real estate industry, I bought my first house in Fredericton. I will talk just about the inspection aspect. The inspector was referred to us by the buyer's agent. The buyer's agent was also the seller's agent. Kind of see where I'm going here. The realtor, or the inspector did miss a few things. And so after we moved into the house, we found out that there was multiple cracks in the foundation. He pointed out, I think, two of them to us, but there was actually 4 to 6. I think there was like 4 big ones. And he also never, at that time, they weren't using moisture meters like you guys do now. So we ended up finding, we had to get air testing and swab testing, and there was 5 strands of black toxic mold in our basement. And when I turned around and we went to our lawyer and said, look, the seller obviously knew this. They didn't disclose it. It wasn't on their disclosure sheet. The realtor missed it. The home inspector missed it. Where can I go with this? He basically said, small claims court, you'd be lucky to get, what you spend on that back. So it's either bite it and chew it. So, my experience was totally different. It was a bad experience right off the top. And then when I went through my real estate course, I was like, yeah, the way that was handled by the real estate agent and my inspector and the sellers was, I was not protected. So it's interesting though, but there isn't much recourse, especially if a buyer right now decides to waive their conditions of anything, inspection, home inspection, sewage line inspection, septic inspection, or anything, my office makes that client sign a waiver form. Okay. So it's an internal document saying basically our realtor advised us of this and we've decided not to do it.
Yeah, no, that's the best way to do it if you have to go that route. Yeah.
I in all of 2021, every one of my closings for my buyers had full inspections. We didn't waive anything.
Good.
I don't believe in waiving to get a buy. But yeah, this market it's totally different. It's weird, but I personally, especially because of my personal experience buying a house, I would never personally waive or tell a client to waive an inspection of any kind.
Yeah. And the other thing is, if you do happen to come across a house that has been pre-inspected, go back to what I said earlier about looking up whether the inspector is a member of InterNACHI or CAFI.
Yeah.
And know that if you see those things, then that they're at least held to a higher standard.
It kind of goes back to that question of the regulations, because I've seen the other side. I've seen not unregulated, but I would say unqualified people. That haven't done the courses that you do not have the background you do in electrical and things like that, they're contractors, jack of all trades, and now they think they're a home inspector. I've seen that side of things, and it's not good either.
Yeah.
All right. How are you guys doing for time? We've been about 48 minutes.
Yeah.
You guys good?
Oh, yeah.
So I think I have...
Good to stay.
Let me hide this. I think I have, let's see. One more question for Colin. Let's jump back over to you, Colin.
All right.
So, Colin, so we have, what are some things people can do to, oh no, we looked at that. Oh, it looks like I think I got all your questions. Oh yeah, this is a fun one too, Mike. You want to talk a little bit about radon?
Yeah, radon. So yes,
we'll throw you right on the spot here for a bit.
That's okay.
Radon.
So you throw your radon on the spot?
We can spend an hour just talking about radon, really.
Yeah. So yeah, I think it's one of those things that either you've heard about it or you haven't. I would say that we as a country and definitely as a province have a long way to go in terms of awareness on radon. And it's basically what radon is. It's naturally occurring in the soil, and it does escape through rocky areas better than through areas that have more soil. So here in Nova Scotia, we have a lot of rocky areas, and so I think maybe our the concentrations that you might find in houses here versus other places in the country are a little bit higher. So maybe it's something that we're a little bit more aware of here than say in Ontario or somewhere. But the reason why it's a concern is it's actually the number 2 cause of lung cancer next to smoking. So if you get a high concentration of radon in your house and you're breathing it in, it can be harmful to you. And with the way that houses are built today, which is a lot more airtight than older houses, you have less natural ventilation into the house, and so the radon will come up into your house through the basement and stay there. So yeah.
No, it's interesting. It's like radon. I don't think you mentioned, but radon is basically the breakdown of uranium.
Yes,
and it's the gas that is created by that breakdown underground. And Nova Scotia is well known for a lot of uranium throughout. So that's why we do have higher concentrations. It is interesting too with new constructions. So it is building code now. So any new construction property have to have a rough-in for a radon extractor. And those cost, last time I saw, when I did research on it, it was anywhere from $1,000 to $2,000. Is that, do you have numbers on that for those?
I don't have numbers, but that sounds pretty accurate. Yeah. I would guess it would be in that range. Yeah. And one of the things is, since becoming a home inspector and getting a radon tester myself, I've tested our own house, and we're in Bedford, and it's,
very rocky.
It's very rocky here. So our house is about 5 years old, and we depending on the time of year have fairly high levels of radon. And I know that when we go away for a week at a time, sometimes we'll turn the heat down and unplug the HRV because we don't need fresh air in the house when we're away. I'll leave the radon tester running, and it's amazing what the levels get up to without the constant exchange of air going through the air exchanger. So keeping it on generally keeps it at bay. But I'm considering actually installing a system here. So yeah.
I have a contact if you need one.
Okay.
It is interesting. So when I was in New Brunswick, and I was working for NBRE, New Brunswick Real Estate Association, I actually was on a task force about radon. It was the UFI of the 2000s that we saw. UFI was a big thing back in the 70s and the 80s, and even now we still deal with UFI, but not as much. But radon is becoming the new poisonous gas that it's in everybody's home. But it just depends on the concentrations. And it's interesting, like you mentioned, how you go away for a week and your levels go up. So testing purposes, there's you can do a 24 or 72 hour, and then up to 3 months or 6 months. Is that correct for testings?
I'm not sure what the actual testing times are.
I know that the U.S. standard, they say, ultimately, especially in Canada, the best time to test for radon to get the most accurate results is winter months, when our windows are shut, and less, there's not much fresh air coming in unless you have those HRVs. But that's when you're going to get your most accurate results, because your home is so tight, airtight, like you said, everything's staying in there. But we've seen levels. We have a guy that does testing for our clients and does installs of the remedies. And some of these tests are actually really crazy. The numbers that are coming in on these homes, and it's not even just 1-year-old houses. It's 100-year-old houses that we're doing these tests on.
Yeah.
So you imagine like how many people have been exposed to this for multiple years.
Mm-hmm. Yeah.
It's an interesting one. Like I said, we could do another episode of this
on radon,
on radon and some of these other tests.
So what you were
Colin,
saying,
does that affect you guys anymore? Sorry, Mike, go ahead.
Oh, not. I guess there's a little bit of a delay. Sorry, I was going to say, as you said, it's a building code now to rough in a duct for the radon extraction systems. One thing I wish was code as well is to run electricity to those locations. So there's a number of houses I've inspected where, or even the duct to the outside. There was a house recently that had a fairly high radon concentration. It had a roughed-in duct in the middle of the basement, like right under the stairwell. So if someone were to install a system there, they'd have to get electricity to the center of the basement, and then somehow get a duct to go out through an exterior wall. It was just not optimally placed. And the same with our house. There's ours is actually on an outside wall, but there's no power there, so we still have to get that over there. So
still have to get the electrician.
Anyone who makes building code and is watching right now, make that change for me, please.
It'll still be a couple more years before they change it.
Yeah.
Colin, do you anything with radon and insurance purposes right now that you're seeing, or?
I've never come across it. No, this is all new.
I wish Danielle was here because I know she would have. Because I know that was one of the issues we had in Fredericton and New Brunswick, because that the mortgage brokers would actually see radon testing something was done, or there was a even a price reduction or a cash back to do something for radon. As soon as they saw radon, they're like, no, not even going to mortgage it. So, in that task force we dealt with, we actually had conversations with the big banks, New Brunswick Lung Cancer Association and Canadian Lung Cancer Association. So it was a lot of education there too, even just with the mortgages. So I don't think we ever looked into their insurance. I don't think they. I mean, that's 6-7 years.
Yeah, no. In terms of home insurance, I've not come across.
No,
I've never been asked the question, so I've never posed it. But I mean, it's not something that.
So we don't want to see any of your regulators see this then.
Yeah, I mean, no, I mean, it's not something that would be insurable, right? Like.
That'd be more of a health insurance probably issue then.
That's what I was thinking. It'd be more of like a health or life insurance thing. When they ask you if you're a smoker. Okay, the next question: you live in a high radon concentration area.
Yeah. Life insurance agent will start carrying the radon testers around.
Yeah. That'd be crazy too.
Yeah.
All right. Well, we've been here for just shy of an hour, guys. And no additional comments, and I think we've gone through our questions that we kind of pre-prepared for each other. Mm-hmm. Anything else you guys wanted to? Mike asked Colin asked Mike, Colin asked me, Mike vice versa. Or are you guys good to go?
No. What about Eric? Do you do with this market? And I mean, I don't know if it's something we birthed them. Like, is home staging a big thing, or is like the market so hot it's like whatever, just get a picture and get it on the market? Like,
yeah. Well, there are. Yeah, we won't go there actually. I believe in it. Myself and my team. Professional photography, staging. If it's a vacant property, it's staging helps, especially a vacant property. So let's talk about vacant property. You walk into a vacant property as a buyer, and you're trying to visualize where your furniture is going to fit. And you're in a big living room. It's very difficult. But even if you have a couple small items small couch, couple chairs, couple tables, you can then visualize, okay, my couch is slightly larger than that. Yeah, it will fit on that wall, or my wall unit, or my china cabinet. So I think it is still positive, and I believe that the staged houses right now, even in this hot market, are still probably getting more money because people can visualize themselves in that house versus walking into a clean, empty space that doesn't feel like a home. That make sense?
That does make sense. Yeah.
Yeah. It's all about someone might offer a little bit more money for something where they can picture themselves living.
It's emotion.
Yeah.
We deal with emotions, right? Especially as a buyer's agent, or even as a seller's agent. I still, helping someone sell their house. It's, I've dealt with people in their 80s, and they've been in that house for 40 years. Like, that's all they know. It's an emotional separation. So, if you can help somebody create that family feel or get that feel of them that they're looking for, and get their emotions going, I think it does help. And even in this crazy market, it's going to help your seller. As a seller, you might get that extra little bit because of that. There's physical staging, there's virtual staging, so you can take a photo of an empty room and digitally put furniture in. So visually online, it looks really good, and then they show up and it's an empty house. But we've done, actually, as a team, we did that for a couple listings. I think it was last year. And basically what we did for our marketing, online marketing, was like we showed the empty house picture or the room picture, but then the next picture was the virtually staged one. So they saw, so when they actually showed up to the house, they could still say, okay, well, I know it's a vacant house, it's empty, but they at least had that in the back of their mind, kind of where furniture was fitted.
Right.
Technology is great, like, for that stuff. There's so much that we can do, and this type of thing, the Zoom calls, the FaceTime calling for virtual showings, we've definitely adjusted for what's going on with the market and the amount of people still coming from out of province here, and helping them while they're out of province, doing the virtual showings and having great marketing, great photos online. That's your first spot that people see you as a seller. So it's very important.
The last two inspections I did virtual walkthroughs with the buyers out of province, just to show them the issues that we found during the inspection.
Yep.
So
and I do that. I attend all my inspections. So I've had people sitting in Ontario, and I have them on FaceTime, and we're chatting with the inspector, and the inspector's like, oh, look at this. And we go right in, look at it. So, it's great, that one. I believe it. I can't imagine buying something sight unseen. Video, but it's, unless you still need that video to at least watch what your inspector's doing, and me as a realtor too. Well, guys, I think I will wrap us up. We're just over an hour now here. I want to thank you very much, Mike and Colin, for joining me. I hope that you guys will do this again with me sometime.
Absolutely. Thanks for having us.
You're welcome. Like I said, this is the first time doing this, so we'll see how. We did get some viewership. We were up to 10 live at one point. I don't know how many really. We're down to 1 right now. I bet you it's my girlfriend in the other room. But yes, thank you very much, guys. And if you guys need me for anything, we will post this, and I'll share all your information as well again. And just thank you very much for dealing with me on this new tech.
Cool.
It went pretty well.
I still have a dog under my desk, and I keep almost kicking her and stepping on her. All right, guys. Thank you very much again. I'm going to go ahead and end this, and we'll chat with you guys again soon.
Sounds good. Thanks, Eric.
Thanks.
All right. Thanks, guys.
Talk to you guys later.
All right.
Bye.